how do you find these people? Is there like an app that has a bunch of lists of companies you can maybe meet with, or show up to a dark alley and then do deals? I don't know, 10 investors, Amsterdam.
Yeah, well, you're mentioning Amsterdam, but why would you limit yourself to Amsterdam?
Because I want to meet the person who's handling my money.
Okay, well, fair enough.
I need to know their face, where they live, if they have kids, a pet.
I'm not sure. I think maybe it's a Dutch expression, but we always say you need to have money to make sure you can buy a new washing machine. So.
Hi, everybody. Welcome to the bunqr. My name is Garazi.
Hi, I'm Brian.
We are here today to talk about everything investments, where to start, and all the details. So
let's dive into it.
So, Brian, I know nothing about investments. Before we started filming, you asked me, and everybody here asked me, what do you know? And I was like, nothing. I've never done anything. So what would be the first thing you would tell to somebody who's like, I know nothing about investments, I would like to learn about it a little bit? Top 3 points.
Yeah. You told me that you are saving.
Yeah.
So saving is, I think, the first step towards investing.
Mm-hmm.
And in my opinion, everybody should start with saving, because when you save money, you can always withdraw that money and use it when you need it. When you start investing, you should do it actually with money that you don't need in the short term. Because everybody that does investing is looking at the long-term impact of it and the return of it. Mm-hmm. So if you need your money within a year, please don't invest in the long term, because you never know if you make a good return on it, if you need that money. So yeah, for me, indeed, when we start talking about investing, I would say only invest with money that you don't need in the short term. Mm-hmm. And then investing, you can invest in anything, obviously. So that's also a little bit a personal preference. Would you like to get the highest return? Would you like to invest in more green or sustainable companies? And that, of course, nowadays is very important. Mm-hmm. So my personal opinion is that we should also invest in companies that are really making a difference from a sustainability perspective. Sometimes that does not give you the highest return, but money is not everything. I think that would be my first reaction on the question from someone who has no experience in investing. How do I invest?
Mm-hmm. At what point do you think is... how much do you need to save? How long do you have to spend sort of learning about investments before you think you jump into it? And what do you think about potentially going to I don't know, like a financial planner or like an investment analyst? Buy my services for 10% of the return. I don't know. I don't know how these things work.
No, I think, you should really think, how much buffer do I need? How much buffer do I need if my bike got stolen, my washing machine is breaking down? But also maybe if you lose your job, can I survive for 3 or 6 months? Mm-hmm. I think that will define the buffer which you should have on a savings account. Once you have hit that threshold, then everything above, you could potentially invest. So I think that's the moment where you can think, okay, I'm comfortable with my financial situation. I have sufficient money to live my day-to-day life, got sufficient money to go on holiday or buy a new bike. And from that point on, you can say, okay, I've got some excess money. I want to invest so I can make a better return on it. Mm-hmm. So I think that would be a good point where you decide, okay, I can start investing from this point.
Mm-hmm. Okay, because I'm coming at it I'm 24. I'll be 25 in October. I have the savings I've been able to gather with my 1.5 years of experience. And what I'm thinking about, for example, is what if I get some inheritance? Let's hope not. Let's hope I don't lose anybody. But let's say that I get suddenly a big chunk of money that is just mine suddenly, and I would like to do something with it. What do you think should be my first steps? Should I first go to a professional? Should I try to do it myself with maybe a chunk of it? I don't think I would trust myself with any amount of large money. But what do you think would be the first steps for somebody who's like, okay, I have something. Now, do I go to somebody? Do I buy a book? I don't know. I would buy a book.
Well, I think it's always good to educate yourself a little bit before you start investing. But if it's not your cup of tea and you don't have previous experience, it would be wise to do it via a third party or get advice from a financial planner. And also to spread your chances, spread your bets, so to say. So don't invest everything in one company or one asset.
Yeah.
As it's with investing also comes a risk, because everybody thinks, oh, I'm going to invest my money, I'm going to make so much return and higher interest. But let's be honest, if people promise you a high return on the cash you're giving to them, then there's also a higher risk connected to it. That's why savings, and normally you get, let's say, 2% of interest, because it's very risk-free, so to say, because you always know you get your money back, or at least the chances that you don't get your money back are quite limited, and therefore you get a lower interest in return. With investing, you take a higher risk, and therefore there's also a higher risk that you lose your money, but therefore you get also a better return if you get your money back. So that also gives a lot of stress sometimes to people, because they can't influence the outcome, because you're dependent on, well, the party you give your money to.
People who do finance.
Yeah, so it's always
Not
better
me.
when you start, don't start yourself, but indeed get proper advice, learn from that, see how they are doing it, educate yourself also by talking to a lot of friends who are also probably are investing. So you get more and more knowledge.
I won't go to my friends, but I'll find someone. I'll go to you.
Go to some older people.
Yes.
Who probably have done it before.
Not necessarily older, just my friends would think I'm the responsible investor, and I'm not. So not to them. What would be, like, let's say that I go to somebody, because I've been thinking about this recently, because I have inherited some, and it's just sitting in my account looking at me, waiting for me to turn 25, which is not great. So what would be like red flags? What if I go to somebody, I'm like, hello, I have money. Will you invest it for me? I'll pay you. And then that person, and I have to choose somebody, right? How would you choose somebody? How do you know what makes somebody knowledgeable, what makes somebody trustworthy, and what should, what do they do to make you run for the hills?
Yeah. Well, it's always good to do some research, obviously, on the party you're giving your money to. So what you can do is do research on how much money do they have to invest. So how many people already gave the money to that institution to invest on behalf of them. If that's a very limited amount, then probably it's a bit shady, or they're not that professional. So the bigger their pool of funds is, and the pool of clients is, then they probably already have a track record from the past on quality in investments. It's also good to look at previous results from previous years. They always say that previous results are not an, how do you call that? They don't promise something for the future, but it gives some kind of track record on, okay, how did they
at least
perform?
knew what they were doing last year.
Exactly,
Maybe they've
yeah.
forgotten about it, but they used to know what they were doing.
Indeed. And I think it's always good if you have a sample of 5 or 10 potential companies that you want to use to invest your money, to compare them and to see how they have performed against each other. Because maybe someone did a 5% return, someone did 6% return. So yeah, then maybe the one that had 6% return is a better one. But obviously it's not only about the amount, it's also about how comfortable do you feel with the person that's helping you, and in what kind of industries are they investing your money.
Do you think you should go to like somebody who specializes in like maybe like smaller amounts? Because obviously there's people who invest millions, not me. But there are people who invest millions, and there are people who are going to invest like 10, 20K, maybe like, small inheritance or like their life savings, and they're like 25, like me. Yeah. So do you think it makes a difference whether the person you're going to specialize in different amounts of investment? There's, again, big gap between 10K and a couple million, but is that a huge difference, or does it really not matter?
I don't think it really matters. Normally, investment firms, they just pool everything together and then they start investing. So then your 10,000 and someone else million, they would just add it all together and invest it in 5 or 10 potential.
And we get the same thing back? Wow.
And
I
you
would love to do that.
potentially get the same thing back, indeed. So no, I don't think that is the biggest differentiation between how to invest from a personal perspective, how much money you have. Normally what you can do is, because you don't invest yourself, so you will maybe invest in a fund that invest in different type of industries or companies. So then it also helps to spread your chances that if one company is not performing that well, but another company is performing really great, then on average, you make a nice return. And I think especially with smaller amounts, it's better to make use of a professional company that can invest on behalf of you, because then you have the scale of money that is not yours, but you participate actually in a fund with your stake that would then generate hopefully a positive return.
Hopefully.
Yeah.
And how do you find these people? Like, how? Because my instinct would be Google. How to invest in Amsterdam, Netherlands. Companies to invest in Amsterdam. Like that, I would go like that. I don't think that's the best way to find them. So is there like an app that has a bunch of lists of companies you can maybe meet with? Or is it you show up to a dark alley and then do deals? I don't know. Don't laugh.
I would not do that.
I've seen shadier stuff.
I think you watch too much television, to be honest. No, to be fair, Google is your best friend. Let's be honest. We are all online. We all give reviews to all kind of to the restaurant you go to the bank you bank with. So why not start with a proper Google search?
Top 10 investors, Amsterdam.
Yeah, well, you're mentioning Amsterdam, but why would you limit yourself to Amsterdam?
Because I want to meet the person who's handling my money.
Okay, well, fair enough.
I need to know their face. I need to know where they live.
Yeah.
I need to know if they have kids, a pet.
But then I think then one of your criteria to select a company is not only the amount of return they make, but also the person behind the company. That should give you a good feeling that they are trustworthy, that you are willing to give your money to them. And I think that's fair. But that also shows that there are more aspects to investing than only trying to make as much money as possible. And for you, that's feeling comfortable with the person that invests on behalf of you. But maybe there are also other criteria that you would like to have in that person. And then I come back to my initial remark. Maybe you want to invest only in green companies or sustainable companies. And that's something you can find online, obviously. So I think starting on Google is not a bad idea at all.
I would have thought it would have been. I love Google, but it's always you think it's the shadier stuff, I think doing deep research is going into page 2 of Google research.
We'll always skip the advertisements, right? And then go to the one that's the actual hit of Google.
Yeah. It's still just page 1, second half, which is not that deep research. But
well, it actually is. It starts with that. I mean, there are a lot of blog posts on where to invest in, how to invest. So educate yourself, but just making use of Google. It's always the best starting point. And then based on some report you're reading, you can go find a person to have a further conversation about investing. And the most important thing is you should feel comfortable investing your money. Because again, you invest for the long term. So it's important that you are comfortable with the party that's investing on behalf of you. And if you start investing, you shouldn't invest by yourself. You should always make use of or a person or a platform or an app that you can use to invest in.
Okay, seems pretty reasonable. I do want to go back though, because this is something that I'm thinking about some news that I've read, for example. So some people whose names, I'm going to try to not name names, but there were some news that some people had invested some of their money into just different funds and stuff, and then some of that money had gone to political causes or political different people running for different elections who they didn't support, and then where the names of the contributors to the campaign, for example, came out, they realized that, oh, my money went to this. And then they were like, yeah, but it didn't have anything to do with this. What do you think is the level of personal responsibility in terms of how you invest? Because for me, for example, it is a nice thing. I have on my bunq app, it turned out that I'll invest in green causes. But do you think there's a level of personal responsibility when you sort of just give your money to somebody? Or do you think you should trust the person you're giving your money to enough to trust that they will invest your money in something that you would agree with?
Yeah. Well, I think it's actually a very good question.
Thank you.
Well, it's again based on your research. Obviously, you can pick someone who invests on behalf of you, and you can tell those people, "I don't want you to invest in war, whatever things, mining, things that are, in your opinion, negative." The moment you have said that, obviously, it's also your own responsibility to check if they're actually not doing that. So it's a bit lack of own self-responsibility to, after 2 years, say, oh, I didn't know it, and now they did something I was not fully aware of. It's still your money. And I think, as I'm a finance guy, so I always want to keep track on my own money. It's my responsibility. It's my money. I want to know what happens with it. So, of course, you rely on the expertise of a third party, but still, you want to make sure that they actually do something with the money that you agreed on before you entered a contract with them, for instance. And if after 2 years suddenly they did something shady, in your opinion, then or you did not arrange a proper agreement beforehand, and
that's on you. Personally, if you didn't arrange an agreement, that's on you.
Yeah,
even I know to do that.
Yeah, and then obviously you can always decide to pull your money out and invest somewhere else. But then it's tricky, because if you want to pull your money out at a random time, then you don't know if that's the right moment to pull your money out, because maybe the companies were not performing well, so you'll make a loss. So it's always a bit tricky, like, okay, when can I stop investing, withdraw the money and use it for something else, or invest it in something else?
I think that makes relative sense. I'm not a numbers person, so again, finance, I do my best, but that's that's pretty much all I do my best.
Yeah. Well, the thing is, and that's also interesting with apps and investing in general. Let's say you invest 10,000 euros. Then I think it's almost in human nature that every day you're gonna check, okay, is it 10,000 euros now 10,100?
Yeah.
And what if it's 9,500? Am I getting stressed about it? Do I want to invest in something else? And again, investing is really in the long run. So don't screw yourself over by going to check every day how your investments are doing. Because if that would give you so much personal stress, then I would not advise you to start investing, and just keep it on the savings account. You know, okay, I started with 10,000, I will get 2% interest. So it will be a little bit higher at the end of the year. But if you start investing, at the end of the year, it can also be 9,500. No stress. Maybe the next year it will be 11,000 or 11,500. But that shows that you really have to have a long breath and a relaxation in yourself, that, okay, I really don't need this money. It doesn't matter if it's performing a little bit less for 1 year, because next year it will be better. And then invest for the long run. I think that's my point I want to make.
Do you think, because of that, do you think that the earlier you start investing, the better it is? Or do you think that you should consider, assuming that you already have that sort of cushion for like expenses, or your washing machine breaks down? Yeah. You've said it a couple times, and I'm just praying that mine doesn't, because it's making some really weird noises.
I'm not sure. I think maybe it's a Dutch expression, but we always say you need to have money to make sure you can buy a new washing machine. So.
No, but do you think that then, do you need to start, or you don't need, but you should start investing the younger the better? Or do you maybe think that if you wait a little bit more, and once you're an adult, a responsible adult with some experience, maybe some more money saved up, that would be better, or it all depends on the risk of your investments?
Well, I think it depends a little bit on your life goals.
Mm-hmm.
So if you want to buy a house at some point, then maybe you need that money to pay the house or reduce the mortgage you need for to purchase a house. So then you can invest only for like 10 years because in 10 years time I want to buy a house. Or do you want to invest to make sure you can stop working at 55 and then you've got a lot of years left to invest. What I always learned is that if you start young and you don't need the money for like 20 or 30 years, you can take a little bit more risk. Because then, again, in 30 years' time, it will always give you, it's most certainly that it will give you a nice return. If you only invest for 5 years or 10 years, then at some point you need to get that money out of the investment. And then you only have a 5-year period where you have to make sure that you make that return. So then you should be a little bit more conservative and risk averse in what kind of industries or companies you're investing in. So the more time you have, so the younger you are, you can take a little bit more risk. And the older you get, you should limit the amount of risk because you need to withdraw the money at some point. And normally when you start investing and you make use of apps or websites or platforms, then you can always say, I want to invest aggressively, I want to invest neutral, or I want to invest conservatively, very conservative. And then when you're young, I would say, just go for aggressive first, because you still have time to make up for it. You don't need the money. And at my age, you go for a little bit more neutral, because I also still have 20 years left.
You're not 25?
I'm not 25, no.
Wow.
Yeah.
You really had me fooled.
But indeed, when you're approaching maybe 60, you want to stop working or work less, then obviously invest a little bit conservative. So you still make a nice return, but the risk of losing out of money is more limited.
I'm online. I like the internet. Again, I'm 25, who would have guessed? And something that always seems a bit surprising to me is I'm on TikTok, whatever, and I see a lot of people talking about like, I'm 28 and I like made this much money on like this one thing. You should all go invest on that, which obviously always seems very like scammy. So what would be your recommendations for at what point is something too good of a return, or at what point is something too good? What would be the red flags on that?
Yeah. Well, if it already feels too good to be true, then probably it's too good to be true. And if you're on TikTok and some influencer is saying you have to go to an app, we all know that the influencer is getting money for each person that register himself for that app. So always be a bit conscious about those type of advertisements, because let's be honest, it's just an advertisement. So then again, you were already saying, I have to do research. So if someone is promoting a certain app and you're like, okay, that sounds good. Double check it with different type of similar apps. So indeed start researching like, okay, the name of the app, comparison apps, or name of the website, comparison websites. So you can first already see if it was a scam, because then for sure it will be online. So then immediately you should not pursue. But you can also make a comparison on that specific app that was highlighted with different type of apps, and then start again. What kind of investments are they doing? And what kind of industries are they investing in? How big is the company? Does it already exist for 20 years, or is it just originated last week? Well, if it's a very new investment firm and there's no backup from previous investment firms or other banks, I would say, okay, maybe not go directly into it.
Not number one, not option number one.
Give it some time. I mean, of course, every company has to start somewhere. But investing is not something new. People doing it for years and years and years. So please, don't go for the first and the best that pops up on your socials. It's your money. I mean, still,
it seems common sense, but also there's a lot of things that seem common sense to me, and then they turn out not to be. I used to be the why can't we print more money kind of type of person. I think it's for question. I'm still I think inflation is not an appropriate answer to that because I also don't understand inflation all that well. But I think common sense should be a good response to most
Yeah.
money stuff.
I mean, you're young. You can take a risk. So indeed, um, yeah. If you let's say you lose out on 5,000 euros, of course you would be very annoyed, very disappointed, but it will not change the course of your life. So in that sense, you can take a little bit more risk when investing. But I think the risk that you should take when you invest is not in selecting the app or the website or the counterparty that will invest on behalf of you. But it's because that can be you can do a proper research on that, so you don't have to take a risk there. But you can take a risk in a more aggressive investment that they will do on behalf of you. So in new type of industries that are popping up, of new kind of technology that is in use, to invest in that and see if that would give a high return. So I think there, when you think about risk profile, don't take a risk on the person that's actually investing on behalf of you or the company that's investing on behalf of you, but take the risk on the actual investment that you're doing with, let's say, the 10,000 euros.
That's great advice. That does actually make me feel a bit better about my money choices. What is your stance on, as somebody who knows nothing about this, on investing on the sort of non-traditional avenues? So things like crypto, NFTs. I don't know if there's anything else on that avenue. Do you think it is a wise choice to do early on your life, or would you personally maybe prefer to wait a bit so that we know how it goes after a few years because it's something very new?
Yeah. Well, with crypto, of course, we have seen the history. So the people that started investing in crypto, they made a very nice return, let's be honest. But we also have seen that it's very volatile. So again, you can only invest with money that you have yourself and that you don't need in the long term. And if you lose out on it, it's not that your life will end. So then you can take a risk on something new, which back in the days was crypto or NFTs. But there's no previous track record, so it is more risky. And that's fine. If you are a person that is willing to take a little bit more risk, go for it. But again, make sure you have sufficient savings to back up a potential loss of that investment. If you're more risk averse, I'm more risk averse, then
Me too.
yeah, then I don't do it.
I've never invested, but I know I'm risk averse.
And then, of course, 5 years down the line, you would maybe think like, oh, I lose out on this opportunity. But it also gives you 5 years of inner peace, because I have never had any stress about the crypto valuation, because I didn't invest in it.
Yeah.
So I was like, okay, good for you that everybody's making more money. And then it was a year that everybody was losing money. I didn't have stress about it. And that is a really nice feeling.
Yeah.
And that was, to come back on that point, don't check the return on your investment on a daily basis. Because if that is your natural tendency, that would be mine, then your whole life is evolved about this investment that you're doing. That should not be the case, in my opinion.
Yeah. Trust that
process.
You've made the right choice, and then let the choice continue to move on itself.
And maybe once a month, once every 2 months, just check. That's fine, and you know it. And
I think that's great advice. I did want to ask, because I know somebody who went to school with me, and he essentially got rich from crypto. And to me, that just sounds like MLM stuff. And I wasn't, and I've never been too sure about it.
Yeah, well, we all know the success stories. We all know people that have made so much money on investments. But for all those stories, there are a lot of stories about people that lost a lot of money. But you don't hear those stories because people are not very open about that. So that's all.
Yeah, because
also
it's embarrassing.
Exactly.
Yeah.
So also maybe we can end that with that life lesson.
Everybody's been there before.
I mean, you hear and you see all the positive stories, but with investing, there is a risk. And that's where you can make a lot of money, because there's more risk involved. If someone makes money, then someone else is losing money. And if you make money, people will tell it to 10, 20 people, put it online. People lose money, they will not share it with you. Yeah. So there is a high risk, but there can be a high return. And indeed, when you're young, you can take the risk. as long as you take the risk with money that you don't actually need, that you just have in excess.
Yeah. I mean, we do all eventually make bad financial decisions. I spent €8 on coffee today. Listen, we've all made our mistakes. It's something everybody does. It's fine. It's just make sure that you learn from it, I guess. No more
And let's be
€8
honest,
coffee, just €5 coffee from now on.
your return was a very good coffee.
It was.
Well, that's
And I
also
really
good. There was a
needed it,
short-term return that was very positive.
It's also payday, so it's fine.
Thanks for listening. I hope you learned something today. If you have any questions, please leave a comment. And of course, like and subscribe. And we'll see you next week.